Good afternoon, everyone, and I hope everybody can hear me. And welcome to all of you. As a part of Century's continuous professional development program, today we are here to learn about AML measures, and today we have gathered here to address a topic which is of paramount significance. We talk about anti-money laundering and how important these measures are, and how important these measures have played in maintaining the integrity of the financial system. And AML training is not just a regulatory requirement, it has become a very vital component in safeguarding against illicit financial activities. And it ensures compliance with international standards set by organizations like Financial Action Task Force. It has been helping preventing money laundering, which is a threat which has far-reaching implications. And in a region known for a very robust economic activity, very extensive international transactions, a strong AML framework is not just a legal obligation, but a cornerstone of trust and credibility. And as we delve into today's session on AML training, let's just remember that our collective commitment to these measures not only safeguards our financial institutions, but also contributes to the broader stability and security of UAE. So, without further ado, I have the privilege of introducing our esteemed speaker who brings a wealth of knowledge and expertise in this crucial domain. And we have Mr. Rizwan Khan. Mr. Rizwan has contributed to the anti-money laundering measures and trainings for the last 2 decades. And he's one of the innovators of the RCMP's Proceeds of Crime program. He's associated with the ACFCS, which is an editorial task force member, and he's an active member of ICA, the International Compliance Association in London. And he has completed Combating Financial Crime from CISI, UK, and International Cyber Certified Professional Certificate from Cybint, USA. So he will be sharing his experience, giving us a training, and this is a great opportunity to learn today about the anti-money laundering measures and how together we can fight against money laundering. So, Mr. Rizwan, please take the stage. And after his training, we'll have a Kahoot quiz. So, let's learn all together. And at the end, there will be a quiz and we'll all participate in it. So, Mr. Rizwan, please welcome and thank you so much.
Yeah, thank you, Yogesh, for your esteemed introduction of mine. And I'm very blessed. I'm feeling very happy that I am from this platform. We will discuss related to the AML CFT compliance. And obviously, as you told, it's a very important topic, and the adherence of the compliance is a basic requirement from the all employees, those who are belong to the Century Financial. So we need to embed compliance in our day-to-day affairs. So therefore, as the regime is totally changed nowadays, and we need to understand the importance of this thing, that we, for the success of the company, we need to properly embed compliance into our systems. And therefore, this, I want to make a very interactive and very a learning session for all of the participants, that they can, if they have any questions, so they can ask me. And also I would like to the core compliance issues I will try to touch in front of you, that I will keep you apprised, that you can meet the regulatory expectations and you can meet the all international standards also. So that will helpful for you in future assignments also as well. So this is the way we grow ourselves. This is what we have learned. I have done my own masters from Oxford University, London, and I think this is the way we improve ourselves. So now the topics which I'm going to cover today, it will cover anti-money laundering, targeted financial sanction, and proliferation financing. So these are the core topics. 3 topics we will move around, we will revolve around. These are very much important topics for us. And we will find out what are the challenges we face into day-to-day affairs and how we can counter them. What are the basic necessities of the compliance? So that we will also we will also try to explore them. So now, these are the contents which we are going to cover today, what is money laundering and terrorist financing, and like SCA regulations and the record retention. We will discuss also. Risk-based approach is a very vital part. When we establish a compliance program, we need to implement a risk-based approach that we will discuss, like related to the AML CFT and red flags. And red flag, especially like from the transactions which are arising in front of you. So how we can mitigate the risk of those red flags, what the controls we need to apply. So that we will also discuss. Enterprise-wide risk assessment we will also discuss, in which we will discuss as a century financial, like what is our risk, how we cater ourselves as an organization, that we are a high risk, we are medium risk or low risk, and what are those parameters which determines this thing, that as an enterprise wise, this is our risk. So this will be like very technical topic, and which we will discuss the qualitative and the quantitative analysis. Then we come towards the targeted financial sanctions. In UAE especially, I tell you, like the regime is totally changing, and after the fact of mutual evaluation, so there are a lot of expectations into the effectiveness of the compliance, that we need to embed like proper targeted financial sanctions program to improve our 11 immediate outcomes, which are highlighted from the FATCA Financial Action Task Force. So that we will discuss also. Then we will discuss about the proliferation financing, which is associated with the weapon of mass destructions and nuclear deterrence. So how we can mitigate the risk of those transactions which are associated with the proliferation financing, that is very much important. Then in detail, we will also discuss the FATCA and the CRS. So what is like the tax liability for those who are associated with the United States, and those who are like on the other jurisdictions, those who are associated, like how they are covered into the Taxation Compliance Act. So CRS, same, like we will also cover the all typologies related to the tax holder, reportable tax, non-reportable tax, we will discuss also. Then we have new technologies, and the fintech is now a new innovation is coming in compliance. And mostly online platforms, the basic challenge, the major challenge is coming from the anonymity side. So how we can mitigate that risk, like if the customer is not directly interacting with you face to face, and the customer is non face to face customer with you. So that we will also discuss. So what is money laundering and terrorism financing? So this is basically there are 22 predicate offenses. So first of all, we need to understand what are the predicate offenses and what is money laundering. Those who are very new into this area, I tell you, this is the future, in which today we are going to discuss, and it will uplift your knowledge, for the future challenges which you have into your organizations. So for this, we need to understand these 22 predicate offenses. So what are these crimes? So basically, these are the associated crimes which occur first. So then money laundering come into the existence. So basically, these are at the top, and then money laundering is the subset of all these 22 predicate offenses. So what are those crimes, and especially which are the crimes most prevailing in our country as a UAE, and which are the challenges of those crimes which we face? So maybe our customers may be associated with them. So these crimes, if I give you the more detail of this, the fraud is there. In UAE, as per the national risk assessment, we have our national risk model as a countrywide, in which we have assessed as a country, we have assessed our risk, because this is the expectation is coming from the Financial Action Task Force. So how it is operating actually? The Financial Action Task Force is an intergovernmental body which is at the top, which is guiding to the regulators that they need to establish their national risk assessment. And after national risk assessment, they need to implement this into the financial and non-financial sector, related to this, that they should know in our country which are the most prevailing crimes. So when we see in UAE, we have the most challenges is coming from fraud, counterfeit, third-party transactions, and piracy. We have the big challenge. So basically, these 22 crimes which are occurring first, then money laundering is coming into the existence. So what the launderers are doing, first they are committing some fraud, they are doing corruption, especially like political exposed person. They involve themselves into the corruption. So therefore, when you onboard any political exposed person, so you need to conduct the enhanced due diligence, which you need to obtain the source of fund and the source of wealth. So these crimes, understanding these crimes is very much important. And then you need to understand like these crimes mostly occur through the like they convert into the cash, and this cash like customers bring into the financial institution and DNFBP sector to legitimize it. So then money laundering come into the existence. No money launderer comes straight away that he has done the money laundering. What he will do, he will try to make the complex schemes in front of you, and then he will come like he will try to legitimize those transactions. So my dear friends, like these 22 crimes, in which drug trafficking, corruption, bribery, extortion, ransom, smuggling, robbery, theft, piracy, terrorism. So these are all like predicate offense. These are the main grid. After this, like money laundering is coming into the existence. So the launderer will earn the money through these like crimes. First, this crime will occur, then money laundering will come into the existence. So money laundering is a white column crime, and like in which like the launderer wants to transfer his illegal gotten gains into the legitimate source. He wants to like convert this into the legitimate source, and therefore he is trying to disguise himself. He want to evade the legal consequences. So therefore, like money launderer, what he is doing, he is trying to bring this illegal money into the system where he can legitimize the money. So, but this is one the definition of the money laundering. Second is this, like if you are assisting someone, let's suppose if we are all the employees, and if we are supporting in the commission of crime to someone, like we are helping out. Let's suppose we onboard the customer without due diligence. We are not like obtaining the proper source of fund from the customers. We are not doing the proper screening, and we are becoming the part of the money laundering. So then it is as equivalent crime as money laundering it is. So being employees, we all have the responsibility of this thing, that we need to adhere with the AML CFT regulations which are prevailing in our countries. We need to follow those. Then we need to establish like AML CFT policy for our company. Like we as a Century Financials, we must have our AML CFT policy, and this AML CFT policy mostly like shared with the all supervisors and the employee. They must read the anti-money laundering policy and what are our controls, so then they will be more familiar about the AML CFT policies. So after this, like if this cycle is very much interesting, if you see here. So in this I'm sorry for this. So if in this cycle, if you see the dirty money is like the predicate offenses, which is earned through the predicate offense. It is coming into the system, and system is your bank or your company. And in this company, after putting this money from this illegal source, the customer is doing different transactions. Like he is buying some currencies, like he is available onto the platform where he is buying GBP in front of USD, or he is buying euro in front of GBP. So he's doing different transactions with you. And finally, like he has converted this money which he has earned through this this trade into some luxury assets, what you say, investment units, or maybe properties they will buy. So this is the third stage, which is called like integration, like customer has done the integration. So these are the basically three stages: placement, layering, and integration. So you being a team member for the sanitary financials, the more responsibility is you at the first level when you onboard any customer. And when you onboard the customer, so you need to ensure this thing, like the proper due diligence of the customer is done. The source of fund or source of wealth of the customer is properly determined. And then you can give the exposure to the customer to do the transactions. And then customer will do the transaction. He will buy, he will deal into the currencies exchange, buying, selling. He will involve himself. So that you need to also monitor through the your monitoring system. So one question like is coming in my mind, like we have three stages: placement, layering, and integration. If like I ask you to anyone, like, can you please tell me like which stage is more difficult, like to track the money laundering? So if anybody wants to contribute into this, like he can contribute to me, like, or otherwise I make you understand, like in the phase of integration, it's become more difficult to find out like where the money laundering is happening, because then you need to go back into the layering, then you need to go back into the placement also. So from integration, you will go back to the layering and then you will go back to the placement. But if you are at the first level, when you were conducting, you were onboarding the client and you were conducting the due diligence of the client, so it was very easy for you to like reach to towards the target. And here you can catch the money launderers very easily if your controls are good. But if your controls are weak, so what will happen? Like money laundering will come into your system. And in the like when the customer is doing buying and selling, like the currencies that they are involved into this, so then it will be very difficult for you to track out like which transaction is associated, how it is funded. So then it will be more intricate. So these three stages you need to take care. Then we have like tariff financing also, because as I told you, in United Arab Emirates, we have a very rich obligation that we need to prevent the tariff financing. We need to stop the proliferation financing. First of all, what is the tariff financing? So tariff financing is basically is to like what happened, that tariff financier, they have some ideology which they want to fulfill. Let's suppose someone is hurt by some religious sentiments, or someone like a family was killed and he wants to take the revenge, and he became the like tariff financer. Or like some rights were extorted, and like therefore someone has adopted he's having the ideology and he became the tariff finance. So in this, if you see the tariff financing always occur through the smaller amounts, not with the larger amount. Money laundering will come always into the bigger amounts, like huge amounts, in millions, billions it will come. But the tariff financing exposure will be around $300,000 to $400,000. If like you see like 9/11, which happened, 9/11 2001. So what happened, like in this case, if you see the total exposure of the amount in the 9/11 case was around $300,000 to $400,000. And the terrorists, what they did, like they attacked to the Twin Tower, Pentagon, on like on different like places they attacked. But the total cost, like which occurred into this, it was like $300 or $400,000. But if you see the impact of that incident till now, it's in billions. Like you can see Iran, Iraq, America invasion. Then you can see the Afghanistan invasion. So you can see like all these which happened after that. So the impact of tariff financing is very big. And on the other side, yes, money laundering is always occurs through the huge amount, billions. If you see like BNP Paribas Bank, which was fined around like $9.2 billion due to the sanction evasions. And same like recently, like in 2016-17, like HBL Habib Bank was fined for $225 million. Then Credit Suisse Bank fined, then Ing Bank fined. So like HSBC fined for so many times due to the money laundering issues. So now we need to understand like how the terrorist financing occurs. So tariff financing mostly occurs through the charities and the non-profit organizations. Like they involved into the terrorist financing. Why they involved? Let's suppose like if I am a person and I want to donate someone for the rehabilitation of the handicapped people, so my money is basically the legitimate money, which should be used for the like real purpose to help out the handicapped people. But the administrators of the charities, they misutilize it, and they use this money in rather than for the rehabilitation of the people, they are using into this money into the terrorist acts. So mostly, like, therefore, terrorist money sometimes comes from the legitimate source also. And one very like important channel which you need to understand, and when we are in UAE, so we need to understand like we have a big challenge through the Hawala transactions. And Hawala transactions are those which are settled like someone makes payment to someone into the other jurisdiction without any money trail, without any due diligence, without any supervisory oversight. So these type of like the transactions are done through the Hawala. This form of the Hawala is totally illegitimate, but there is a one form which is legitimate by the regulator, by the Central Bank of UAE. That is a different domain that we will not going to discuss here right now. But you must know, like the Hawala always, like informal financial system, sometimes become a big challenge, a big supporting channel for the terrorist financing. So these are like this is the basically index which I have highlighted into these slides, like Afghanistan and Iraq, Somalia, Burkina Faso, Syria, Nigeria, Mali, and Niger. So if we see in Afghanistan, like Taliban is are there, and like but the terrorism is 9.11. It's a very high like rate is there. Then we have Iraq and Somalia. There's a Al Shabaab group, and this Al Shabaab group is basically like also involved into the terrorist financing, and especially they misutilize the product of the charcoal. Then Burkina Faso, we have in West Africa, Syria, Nigeria, Mali, and Niger. So these are all countries, like if you go there, so these challenges are always there for the global terrorism index. They have highlighted these countries. So ratio is very high. In Nigeria, you remember like there was a human trafficking and human smuggling case was like Boko Haram case, like everybody, maybe you can remind yourself. So terrorism, like the involvement of most affected countries, like which were affected by the terrorism in till 2022 includes Afghanistan, Iraq, Somalia, Burkina Faso, Syria, Nigeria, Mali, and Niger. So then SCA regulations and record retention. So I tell you like different regulations are coming into the SCA ESCA, like maintaining of the accounting record showing financial transaction. It came in 2015 and it implemented immediately. And the purpose of this was to like conduct the proper, fair, and transparent financial transactions. Because in the financial transactions, when we are talking about, so like the focus is towards that there should be no misappropriation, no misrepresentation, and there should be no misallocation of the resources. So therefore, we need to conduct like the proper audits for this. And there are like a federal decree law, like number 2 of 2015 is focused toward the timeline limits to the maintain the accounting records, and the formats needs to be maintained. And then Council of Ministry decision is there, like 3/2000, for the transparency of the board of directors. So board of directors should be transparent. So the UBOs, if they are opaque and they are not transparent, so it increase more risk related to the money laundering and those challenges. So therefore, like transparency into the board of directors is also required. Then we have the regulation in trading, clearing, settlement, and transfer of securities. So this is very much like related to you. So you need to conduct like proper fair trading, and there should be a clearing. Settlement terms should be very clear with the buyers and the sellers, and how the security will be settled on. So these all things should be very transparent. Then there are the regulation concerning opening of the trading floor. So there are opportunities like which are highlighted into this regulations is like related to how you need to ensure to perform the transaction into the trading floors, how you need to conduct the robust risk assessment evaluation for all of your customers. So this is like this regulation is related to this. Then we have like a regulation in relation listing trading of the commodities and the commodity contracts. So commodity contracts should be very transparent and very much legitimate, and you need to ensure this thing that all like the commodity contracts which we are have done with the clients are properly like fulfilling our checklist. Those who are our clients, we have maintained complete KYC of our customers. And there are like some circulars are related to the conflict of interest. So conflict of interest is a very like important part in which you need to ensure this thing, that there should be a no like this, like in which you can like there should be a conflict of interest may arise. So therefore like board decision, so therefore it is the best technique to avoid these type of circumstances is there, that there should be some committees which can review the performance of the board decisions also, and they also involve like to department wide decision. So you, if you will establish some committees like this, so you can refrain from the conflict of interest. And same like this, like when HR team, when they onboard the new employees or the existing employees, so they conduct proper thorough background check to understand this thing, that there's no such relationships are there, there's no conflict of interest is coming. And when the responsibilities are given to the employees, let's suppose we have mashallah one compliance officer, so compliance officer needs to work into the independent capacity, and it should not be collide with the operations department, because if you will collide with the operation department, like it will be like involve themselves into the operation department affair, so then conflict of interest will arise, so which is not acceptable. So the independence of the department is very much important. As a corporate structure, we need to establish the department, that each department should be strong, and there should be no bandage solution. The temporary solutions are not encouraged. The most appropriate approach is this, that we establish a proper corporate departments and give them the independency to work on. And as a matrix, we should get the desired results. Then we have like regulation complaints like relating to the financial market transactions. So this is also very much important. So everybody should have the familiarity of this, like in case of non-compliance, so then some issues can come. And if there are the complaints are coming related to the firm that they are not adhering with the market laws and regulation, so it can impact the credibility. And yes, obviously authority can take some action on this, and I have seen there are some violations and the penalties if we are not properly following the all laws and regulations of the regulatory authority. So same like this, like regulatory controls for the financial activities and the services are important. So these also regulations came. Then we have like regulations of the derivative contracts. So concerns are properly highlighted into the derivative contracts. So you can check like all those in which like the future tradings or like open market values. So everything you can like you need to follow according to the this decision of the 22 RM 2018. It is very much important to understand what the expectations needs to be involved into implementation of the derivative contracts. Then we have like regulation manual of the financial activity and status regularization mechanism. Rule book is there, and rule book is a guideline how the functionality will be done into your business operations also and the financial activities. So the people, those who are involved into this area, they need to study proper rule book, and this rule book should be configured into your mechanism, into your program, into your plan, that this we will follow and adhere. And same like this anti-money laundering. So this is our part, which is very, very important, like AML, money laundering and counter financing of the terrorism, and development of the legal and the regulatory structures. So this is like very much important. As I told you, we want to implement a proper compliance, and we want proper we need to ensure this thing that the compliance is properly embedded into the system. No employee can claim this thing that without compliance we can work. We will not work until we will not adhere with the compliance. We need to adhere with the compliance. So everyone should know what is his obligation related to the AML CFT. Everybody should know how we can establish a more appropriate culture of the compliance in our company. So the culture, it should be like this, that yes, we need to complete this document, and for this we need to collect the information from the customers. Then regulation of the company is having accumulated loss as percentage of their capital. So some like regulations came in which like the liquidity related, like where like liquidity shortfall and it is cutting the capital, so capital is squeezing. So this regulation is basically guiding, like in the case of the losses, if there are some related to the capital, so how to inject a new capital. So these are all guidelines are available into this regulation. And then the common reporting standards are also there, like regulation in relation to obtaining information from the financial institution and on to the jurisdictional or the annual basis. So financial institutions related, at the annual basis, they need to follow some SOPs in which they need to establish their complete compliance reports. They also need to establish their financials also onto the yearly basis. So there are guidelines which we say like common reporting standards. And then we have like regulation in application of ESR to the companies, like economic substance regulation is also there. So this is like very much enforced, and if the companies is not properly following to the ESR guidelines, so then it can create some fines and the penalties for the firm. So it should be properly followed. And then issuance of the directives. There are some directives in bindings, and bindings for the implementation of the provision of ESR are also there. So in a like whole, these regulations basically are prevailing, and you need to abide like properly all these regulations. I will suggest like the all rule books need to be studied, especially for the operation side. Those who are authorized person, they need to go through with the all rule book, like related to operations and the configuration of the operations into the system. And on the other side, from the AML CFT point perspective, like we also need to read the proper, like the complete rule book, and we need to go through like the core guidelines which are highlighted into the SCA AML CFT regulation, in which we have risk assessment, we have a risk-based approach, in which we have the sanctions compliance, in which we have the transaction monitoring. So these all needs to be followed properly. And yes, the all employee needs to be well educated, like how they can escalate the STRs. So record keeping is also required and maintained, like regularly maintain record of the soft copies as well as the hard copies. You need to maintain and keep original records with the obtained documents. So this is like basically the normal practice, which is done like whenever you onboard a customer, you need to maintain a proper file, or digital documents also needs to be maintained, because whenever law enforcement, they conduct their examinations, so they will ask you, like authorities, they will ask you the proper documents, and they will ask you the data what you have collected from the customers. And they will also sometimes they will ask you like how you conduct your internal audits, how you conduct the trainings. Let's suppose today I am conducting this training, so this training must have a complete documenting trail, like in which like who conducted the session, what the session all about, and like who are the participants audience into the session. And and after this there should be a fit proper test also, like in which we can assess what you have perceived from all these things. So now as I am starting my compliance side more now, So we have risk-based approach to AML CFT. And what is like a risk-based approach? Actually, I tell you, like when we establish a compliance department, and maybe like if you people are interested to work also into the compliance in future also. So I tell you, like our major objective is to like implement a robust compliance which is supported by our risk-based approach. The compliance only objective is to implement, to minimize the risk. This is the objective of the formation of the compliance department. And how like AML risk assessment will help us, like it will help to like mitigate the risk of the money laundering. And this approach, like risk-based approach, which I am saying, to detect, prevent money laundering. And then it will also understand the level of risk customers bring to the company. So this is very much important. When you onboard a client, so you should know what is the actual risk of this customer. This is my high risk customer, this is my medium risk customer, or this is my low risk customer. So if this customer is a low risk customer, you don't need to be so much worried. But if this customer is a high risk customer, so then you need to think like in this case, like what are my obligations? What I need to do in this case? So therefore, there are some categorization is expected. Like each customer needs to be categorized in your risk assessment program. Then identification, risk resources, and evaluation of the risk reduction programs, and run successful AML CFT compliance program. So basically, when I'm saying the AML CFT compliance program into the last line, so everybody should know what is the AML CFT compliance. Basically, it is based on 4 pillars, major 4 pillars. Number 1 is your AML CFT policy procedures and controls. Second is your compliance officer. You must have a one compliance officer who take care of the all companies AML CFT related affairs, and who will be the responsible for the day-to-day compliance. Then we have the training, and training like which I am conducting. So this is like the 3rd pillar of the compliance. And the 4th, after this, you have the internal audits. Like internal audits are those who will conduct the audit to check this thing, that the compliance is properly embedded or not. And they will check like what like documents you have collected from the customer, how you are monitoring the customer, how you have allocated the risk to the customer, so how you have conducted the enhanced due diligence of your customer. So basically in the audit, like we will verify all these things. So basically AML risk assessment requirements are like this. And SCA website, if you will go through, there is a risk assessment form. Survey is there, and this risk assessment survey is very much important, in which you need to like study like which are more related to you. So everybody should be familiar with those surveys, and everybody should also familiar that what is the authority is expecting from you. So basically risk-based approach, this is you need to decide as per the FATCA guideline, like what risk do we have. So first of all, you need to understand what risk we have in fact. Then do we have the sufficient resources or not? So sufficient resources are very much important. If you don't have resources, let's suppose if I say, if you don't have an automated system which can capture the customer risk, so how you will like understand, or you identify, or you will verify, or you will assess your customers? It will be a difficult for you. So there should be a controls, there should be a resources. You must have also some team, like team members, those who will perform their responsibilities related to the risk. So how do we allocate the resources we have? So obviously, like a compliance officer is the manager, senior management in your, like the firm's compliance manager position is a very senior position, and this senior position like take the decision for the betterment of the company related to the mitigation of the risk of any financial crime. So regulatory authority also like is also given a very high weightage to the compliance officer affairs, and so therefore you need to follow those guidelines which are given by the compliance officer in the firm. So then there are some RBA, like risk-based approach. So RBA, this word is very much important, like risk-based approach. And our risk-based approach is based on, like, first of all, we need to understand what are the high threats we are meeting, which are the high threats are coming in front of us. Then accordingly, we need to allocate some resources. And then after this, like we need to conduct like sound judgments and static customer risk assessment. Like it should be like qualitative and quantitative. Your approach will be qualitative and quantitative. So risk, when I talk about, so it will cover like the two areas more, qualitative and quantitative assessments. So like key risk indicators when we conduct our risk-based approach. So the risk indicators is basically based on these 7 categories as per the authorities regulations related to the risk, and same are highlighted into your national risk assessment also. So I tell you, like this is a very important slide, in the sense you need to understand the size of the business and the transaction of your customers, your customer type, like your customer is coming from which sector. He belongs to gold, he belongs to real estate, he belongs to art and dealer, from where he belongs. He's an individual, he's a salaried person, he's a non-salaried person, he's a free zone company, what he is actually. So accordingly, you will categorize the risk of the customers. Then type of the products and services sold to the customers are also very much important. So you have those different products here, like CFD, you have like other markets, like shares, you have commodity trade, you have. So you need to understand like which product you are offering to the customer. Then accordingly, you need to allocate the risk of your products also. So what is the risk I am carrying most? So let's suppose if I am dealing into the currency exchange and I am providing the platform for the currency buying and selling. So what is the risk of this product? So that needs to be allocated into your systems. Then the location is very much important, like of your customer's location, like geographics. So geographics, as I told you, there are some high-risk countries like Congo, Somalia, like Afghanistan, like Iraq, Syria. These are the high-risk countries. And when you are dealing with these high-risk countries, so you need to allocate some scores into your system. And these scores will be accumulated with the complete configuration of the risk. Then delivery channel, like your customer make payments to you through some, like sometime through online transfer, sometime through checks, or sometime through the bank transfers, or if customer is also paying in form of cash. So what is the risk it is carrying on? So that is very much important. So your risk categorization are based on to these 7 major components. Then new technologies or products. And that also you need to understand, like if your customer is like engaged themselves into, let's suppose they have the what service providing, like they involved into the crypto buying and selling. So what the risk you are calculating in that sense when the new technologies is coming, or your customer is dealing into the mobile money transfers like M-Pesa, like they are providing these type of services, like in which the customers can transfer their money to some other places through mobiles. So that risk, new technologies risk, we also needs to determine of our clients as well. So by the way, like these are the 7 categories in which you all need to be familiar. Then we have like country level risk and sectoral risk and entity wise level risk, and the business relationship risk are also there. And if we see country level risk, obviously like key AML activities identified into the national risk, or cash based money laundering, trade based money laundering, and misuse of the illegal legal person. So when I talk about the legal persons, so it's mean I am talking about the like corporates, I am talking about the companies. And in these companies, like we need to ensure this thing, like if they are involved to any high risk country, like where the risk of the money laundering is very much, very high. So I need to take care. I need to understand what is the inherent risk this customer is bringing to me. So country level, you need to like assign the scoring of your customers. Then we have the sectoral risk. So sector wise risk is very much important, that in which you can determine like which sector is risky. Let's suppose we talk about in UAE. So in UAE, you need to understand like we have different sectors. If I say like MSBs, money service businesses, exchange houses are risky, because as per your national risk assessment model, like the mostly money laundering is done through the exchange houses. So I mean your risk is very high towards the MSBs. So compliance law officer, whenever they are conducting their risk assessment, so they should consider the sectoral risk. This sectoral means sector-wise risk, and accordingly evaluate the efficacy of the mitigating controls. So in compliance, we will do 2 or 3 things. Number one, like we will identify the risk, then we will apply the controls, and then we will like check like what is the residual risk of this customer. So this is like we will go on into our approach should be like this. The entity wise also you need to understand like national risk assessment identify misuse of the legal person. Basically in our region we have the challenges, especially from the free zone side, and where the complex structures are there, and where is where like sometimes beneficial owners are very opaque, not very clear, dubious. So that we need to take care also. So we need to ensure this thing, that which type of company or the corporate we are dealing. If like we are dealing with a corporate, and so we need to understand who are the shareholders in that company. And in this shareholder, we need to ensure who is the beneficial owner there. So we need to prevent this thing, that the company like should not misuse us, or even individual should also not misuse to us. We should not give him an opportunity that like he assess our vulnerability and he try to like inject illegitimate money in our organization. So that we need to take care. One important part which in the research paper of Manchester University, when I was doing my MSc, we discussed that the criminality, to stop the prevent the crime, we need to understand the criminality first. What are the possibilities that these crimes may occur. So we need to like in our roundabouts we need to understand what are the opportunities we are giving to the financial crime offenders. So if we will give the opportunities, so then they will intrude our system and they will be a big challenge for us. So same like business relationship, like so wide divergence across the UAE registries to educate accurate and current beneficial ownership information is maintained. So UBO's information is very much important. So when you onboard a customer, so you must have a complete checklist. And in this checklist, you need to ensure that the proper due diligence is done, and like the UBO's beneficial owners are not involved in any sort of the sanctions, and they are very much transparent. So NRA like outcomes also NRA, when I'm talking, it's mean like national risk assessment, which we have of UAE national risk assessment, and it is highlighting the deficiencies at the national level, sectoral level. So therefore, like what we need to do as a company, we need to follow the complete guidelines which is highlighted into the national risk assessment. One very important the part or the detail which I will love to share with you, that in our national risk assessment, the biggest crimes which are occurring in one of them is fraud. And fraud, external frauds and internal frauds, both are done. So external frauds mostly come into the cyber in the form of the cyber crimes, but internal fraud sometimes becoming challenge from the employees. And there should be a complete SOP. There should be a proper functionality of the fraud officer or the compliance officer if he is doing the same function also for the fraud detection. So so how to interview, how to investigate, how to collect the proper evidence in the case of the frauds. So that is very much important. So in our country, the biggest risk which is coming, it's coming from the fraud, and counterfeiting is also there, and third-party transactions are also involving there. So this is like national risk assessment, as I'm talking about. Basically, national risk assessment wants to establish some internal policies, controls, and procedures, and same time, like it is more concerned about to applying CDD approaches to conduct enhanced management once identified. So purpose of the national risk assessment is to cover the inherent risk. Inherent risk, first of all, like what sort of the risk it is. Let's suppose if someone is coming from Syria, if coming from Somalia. So it's mean like this customer is having inherent risk. If someone is belonging from Afghanistan, so inherent risk is there. So what you need to do, you will do the business with all this, but you need to apply some controls on it. When you will apply some controls, so obviously you will minimize the inherent risk of these customers. And that also needs to be defined, like which countries, which sanctioned person you will not deal. It should be stated in your AML CFT policy of your firm. Very clearly, it should be stated. So provide regulator with assessment to enhance legal framework, and also provide relevant entities assessment results to undertake its own risk assessment. So own risk assessment is very vital, which we will discuss later on into the enterprise-wide risk assessment, and also providing assessment results to the other mutual evaluation groups as well. So this is also very vital for us, like what are the mutual evaluation, so how the mutual evaluation is conducted on, so that we will also discuss. Now the ratings, as I was talking with you in our UAE, these are the major concerns, and in SCA, obviously in ASCA and in Ministry of Economy, we have this obligation to follow this model of the national risk assessment. So my friends, if you see, when I am saying the high risk categories, so high risk categories is fraud, counterfeiting and piracy of the products. And also we have narcotics, drugs, and the psychotropic substances, and professional third-party money laundering. In UAE, this professional third-party money laundering is very common. And sometimes what happens, there are some intermediaries involved into the transactions. So that you need to take care, and especially when the payment is settled from ABC instead of the originator. So in those cases, you need to understand what is the relation of A to B and B to C and A to C. So this triangle you need to understand. Then we have the medium high risk also, like insider trading. We have manipulation, theft, and the goods forgery, smuggling, tax crime, terrorism is also there. Then medium risk categories also there, like extortion, corruption, bribery, sexual exploitation. So sexual exploitation, I tell you, especially like human trafficking and human smuggling is also a big crime. So sometimes what happens, the money is routed through some rackets which are involved into the human trafficking. And then we have the counterfeit currencies, murders, grievous injuries, kidnapping, illegal restraints, and hostage taking, piracy, and environmental crimes also. So now, like sectoral vulnerabilities, when we are talking about, So if you see here, the financial companies like the banks and MSBs we have put into the higher side, like high risk. And then we have the medium high, like financial advisory, consultancy, finance companies. And like security sector, we have put in like as per the national risk assessment, it is into the medium high risk sector. So sector wise, you also need to understand like in which sector we are and what is our risk as a sector. So MVTs, like money value transfer services, as I told you, mostly money laundering happens through the MVTs. So it is into the high risk sector. So securities again medium high is coming. So now like some of the red flags we will discuss. Thank you very much. So transaction which, so these are the red flags. Red flags mean warning signs. Warning signs mean when these will come in front of you, so you need to be careful. And especially like transaction which doesn't make like economic sense. So if the customer profile is something totally deviated, what sort of buying and selling he is doing into the engaged into the currencies. So you need to understand, you need to conduct a due diligence of your customer to understand that what is his exposure, what is his business. Then like transaction involving like large amount of the cash. So this, the modality your compliance officer will check, like do we engage any sort of cash transaction? So mostly like you are engaged into the bank transfers and online transfers and other formal channels. So therefore the risk becomes less for you. But these red flags needs to be incorporated in your system, in your compliance system. Whenever this type of transactions occur, so then pop-up should come. Then transaction involving like a transfer abroad. So if someone's a customer is willing to transfer like this his earnings to some other place or making payment to somebody else, so in that case you need to conduct a proper due diligence of the customer. Or like customer with a significant history with the security firms, like who abruptly liquidates all of her assets in order to remove wealth from the jurisdiction. So this is also the characteristics. Basically, it's a very common characteristics of the launderers, that what they do after playing with the securities, they want to liquidate all the assets and they transfer into some secrecy haven. When we talk about the secrecy haven, like Cayman Island, BB Island, or Panama, or like Seychelles, so these type of countries, they transfer the amount. And then customer opens an account and purchases a product without regardless to loss, commission, or other cost associated with the account, in including like with early cancellation or the long-term security. So sometimes like customer will be very least concerned about the margins. And so if the customer is least concerned, so you need to understand like what is the reason of this. Maybe like if it is he's not aware about the market, so this is your like as per your market consumer protection regulation, you need make him understand that this is the market sentiment, you need to make him educate. But if he is like he is having these characteristics, that he is having illegitimate money and he is least concerned about these things, so then you need to conduct proper due diligence of these type of customer. Or the security account used for the payment on outgoing wires with little or no security activities. So the customer, those who are engaged from your platform, or like so they are like basically what is their business, what they are doing, and their business earnings are like not related with their business profile. So that is a concern for you. Then like a customer who is unfamiliar with the financial product performance and specification, but wants to invest into nonetheless. So these type of customers, they will come that we have the money and we want to invest, but we don't know what to do in this. So and like because what they want to do, they have into the back end some customers, like those who will associate it with the laundering, they will have illegal gotten gains and they will try to inject that ill gotten gain money into the financial firm. So then customer transaction include a pattern of sustained loss, and this may be indicative of transfer value from one party to another. So this is what happens if customer is even sustaining the loss, but he is transferring from one party to another party. So basically his objective was to give a legitimized platform by using the company's platform. So what he will do, he will transfer this money to someone. So this is also very common technique which is used into the commodities market. And then we have tax crime related transactions. So some people they conduct the transactions in which there is some evasion of the taxes involved, and they incorporate themselves into the currency platforms, and they conduct the transaction to evade the under invoicing and over invoicing gains, because they want to legitimize their ill-gotten gains through this practice, and they want to hide the taxes, they want to evade the taxes. And transaction not matched with the profile, so customer exposure is not matching. What sort of the transactions customer is conducting is not matching his actual source with his actual income, which with his actual legal activity, it is not matching. And complex business structures, if you find out some customer that he is having a business in which it's very complex and it is very difficult to understand this type of customer, so you need to conduct this is a warning sign for you, and you need to conduct the enhanced due diligence in this case. So next topic is enterprise-wide risk assessment. And enterprise-wide risk assessment, as I told you, you need to establish a program in which you can assess the risk of your company. And in this company, when we say we will assess our company, so we need to see what is our customer risk profiling procedures, what is our products, and what are the transaction volumes or jurisdiction wise volumes are there, what is the complexity and the nature of the businesses. So that we need to understand into the EWRA, enterprise-wide risk assessment. So nowadays, regulatory authority wants you that you need to establish this enterprise-wide risk assessment document, which will help out into your examinations. When the examination will come, so you can give the complete picture to the authorities. So for the EWRA, what it helps, board oversight, yes, your board will be able to understand that what the risk we are carrying. Second, there should be a sound and systematic framework process for the risk assessment, and accurate qualitative and quantitative. So qualitative, you will highlight some specifications of your customer, that this is high risk due to because he belongs to a high risk country. On the other side, the quantitatively, from the numbers and scoring 1, 2, 3, 4, 5, from the scores you will also tell that these are the numbers are coming. Therefore, we are this segment we are taking into our high risk category. So you being a Century Financial, you need to understand as a company wise which risk we are carrying, and what is their scoring, and what is after this achieving this score, what the preventive measures we are going to take. Then we have the address area of improvement in EWRA, gap analysis. The next point is gap analysis. So gap analysis is a very important part. It should be part of your EWRA. And continuously, once in a year, you need to conduct the gap analysis of your organization related to the risk. And then you will able to identify what are the loopholes. Then accordingly, you will address those loopholes to minimize the risk. Then allocate appropriate budget and resources. Obviously, you need to take a budget for this thing at the end of the year, that what will be our forecast, how much budget we are going to induct in our plans. So it's very much important for the EWRA. So this is data analysis is also very much important, and insight assessment of the control effectiveness. So this I will discuss with you. The control effectiveness is very much important. Basically, you people all understand the risk equation. Risk equation is that inherent risk, minus control effectiveness is equal to your residual risk. So if let's suppose your inherent risk is 10 and your controls are 4, so then how much is your residual risk? 6. Residual risk means remaining risk. So it means your remaining risk is very high. So which is going above your risk appetite. So therefore, you need to manufacture your risk program in the way that you counter properly your inherent risk, and your residual risk should be less. Then your risk appetite statement, your risk appetite will be good. But if your controls are weak and your inherent risk is exposing, so then your residual risk will also be much, and you need to allocate more and more resources. Then you will think like to de-risk the customer. Then you will also think to transfer the risk of the customer. So then you need to think into the different different areas. So qualitative information and the quantitative information. So these are basically the two type of informations. So I will not go into this detail because I want to cover a little bit more very much related area also with you. So this is very much related for you because nowadays like targeted financial sanctions and proliferation financing is from the Executive Office of Control and Non-Proliferation. They are very much focused toward this side. And first of all, like now we are coming into the sanction side. First of all, everybody who was very new into the compliance understanding, try to understand sanctions mean prohibition, that we will not deal with this. So this is called prohibitions, sanctions. So there are some targeted sanctions. When we talk about the targeted sanctions, it means some individuals, like sanctions are there on some individuals or some entities or some countries. So we say like targeted financial sanctions. These are also called as smart sanctions. So usually like what we follow into this, we follow the like UAE local authorities there, and which is helping us out. Like guidelines is coming into for our organization time to time. Our compliance is very much aware with all this, like which are the guidelines are coming related to the targeted financial sanctions. So what are the targeted financial sanctions? How to implement the TFS? This is also called TFS. So please don't get confused if I talk this, if I speak this word of the TFS. So TFS means targeted financial sanctions, and how to identify the sanction evasion. So there are some illicit financing from an international perspective is also there. TF and the proliferation financing. So basically, these two are the major challenges in our region. So Executive Office, IEC, act as a focal point in UAE to implement the targeted financial sanctions and proliferation financing. So proliferation financing, when I'm talking about, so the word by the proliferation financing is associated to the weapon of involvement into the weapon of mass destruction or nuclear deterrence. The Iran sanctions and North Korea sanctions are coming from the proliferation. They are under sanctions towards the proliferation financing. Excuse me. So now targeted financial section, to deny certain individuals or entities that mean the support terrorism and finance of the proliferation of the weapon of mass destruction, which we will cover into the PFS. So there are some comprehensive sanctions. So, and the targeted sanctions are also there. So comprehensive sanctions basically prohibiting commercial activities regarding entire country, like the long-standing US embargoes of the Cuba. So when a country imposes the sanctions to the other country, like Iran has, America has imposed the sanctions onto the Iran, these are the unilateral sanctions also. And by the way, like most of the United Nations sanctions are coming, is taken from the OFAC. OFAC is the Office of Foreign Asset Control in United States. They take the sanctions for the United Nations, and then they impose onto the countries also. at a unilateral basis. So United Nations, you should know that United Nations impose sanctions, same like OFAC impose sanctions. OFAC is US Treasury Office for the Office for Asset Control, Office of Foreign Asset Control. Then like blocking transaction with the business groups or the individuals. So these are the basically lists which are followed in our system. Whenever you onboard any client, for your knowledge, I am telling you, whenever you onboard any client in our currency platform, so what happens? Like we have our United Nations list and we have our local regulator list. So the name of that customer is checked through that system. And when this pass through the system, then you can do the transaction. If like if this person will be a blacklisted person, or if this person will be involved any sort of financial crime, and he is blocked by some authority like United Nations or from the UAE regulator, so then you will not able to do that transaction. It will be automatically stopped into your system. So therefore, when you onboard any customer, sometimes compliance team takes time, because what is happening in the back end, the hit is coming and the compliance is trying to investigate those things. So OFAC, as I told you, Office of Foreign Asset Control is United States office for implementing impose of the sanctions program. Then European Union we have for the Europe side. Then HM Treasury is for the London, UK, United Kingdom, and the Canada. They have also their sanctions list, and local regulator we have here UAE. So basically, objective of the UAE is to promote international peace and security and strengthen combating threats, national security by combating threats. Then we have like the United Nations sanctions measure. So these measures will become implement like asset freeze. If someone is involved into the sanctioned person is involved or company is involved for any type of transaction with your company, so what we need to do, we need to freeze those assets, freeze those funds of that customer if customer is a sanctioned person. Or sometimes you will have this challenge that one customer is not today today under sanction, maybe tomorrow he will come under the sanction. So therefore our automated system must be so capable that they keep monitoring automatically, they keep monitoring of our customers, clients as well. Then we have the travel bans, arms embargoes, and the business restrictions as well. So terrorism and terrorist financing, as I told you, like weapon of mass destruction is a big concern. And Democratic Republic of the Korea, is under the composite sanctions. Then UN sanction regime. So these countries are also up to some extent they are under the scrutiny of the United Nations, in which Central Africa Republic, Congo, Lebanon, Libya, Mali, Somalia, South Sudan, and Yemen. So there are different types of sanctions which are imposed by the United Nations. So what will happen, like criminal penalties and including imprisonment, civil penalties will come, and reputational risk will be damaged if you will involve any sort of, you will onboard those customers like which give the exposure to those companies which are involved into any sanctions. So United Nations chapters are more important, and they want like employed to give effectiveness to the United Nations Security Council regulation. Sanction regimes needs to be very much solid and strong. Then we have like there are sanctions like targeted sanctions cover travel bans. Sometimes like the individual is not supposed to move from one country to another country, so there will be a travel ban when he will go to the immigration counter, so he will not be allowed. There are some arm embargoes, sectoral sanctions are also there, sector-wise. Charcoal, like Somalia, in charcoal, as I told you, the terrorist financing it is used. So that is also a important part. Then the FATF recommendations, like a financial action task force. So this is also highlighting like don't deal with any sanctioned person or any sanctioned entity. Don't deal with any sanctioned country, because if you find any person who is involved into the sanctions, so you need to conduct the asset freeze. And there are some but also it can impact like travel bans, arm embargo, sectorial sanctions, also their weapon of mass destruction related to the goods and material. So now, like in TFS framework, we have OFAC, EU, and HMT. Like mostly, it's very common. But in UAE, like we also follow our local regulator list also of executive office list, which they are time to time they are issuing that this person is sanctioned. So what you need to do in your system, it needs to be properly integrated. That your system is properly updated with this if some sanction name is coming. So then we have like National Anti-Money Laundering and CFT committee, and basically its role is to establish some strategy and understand the risk of the national risk. Then we have the Supreme Council. Then we have the TF and PF. So TF means terrorist financing. PF means proliferation financing. And local listing committees are also there. So executive office, as I told you, we have executive office here in UAE, which is monitoring like all authorities, not ASCA, but all like Ministry of Economy, like ADGM, Central Bank of UAE, like all are monitored by executive office related to the sanctions and supervisory authorities into the DNFBP sector. When I talk about the designated non-financial business professional, I mean like gold sector, like real estate sector, they are also come under the they are supervised like by these authorities, and they have the expectation that proper implementation of the sanctions compliance program. So this is like these are your sectors. This you need to understand like what is the sector wise categorization in our country. Like we have the bank, exchange houses, finance companies, brokerage firms, insurance, reinsurance, asset fund, real estate agencies, dealer in precious metals, and like accounting firm, auditing firms, law firms, and company service providers. Then these are the websites of the objectives of the website. This website, I will suggest you, like being a learner and being a beginner, like you all should go and you should see there, like what is like, as I told you, like when I started my this presentation, I told you like now the growth for everyone, every individual is also into this, that you need to learn the compliance because it will help you out to into your day-to-day affairs. So therefore, this is a one step like you can take. You can go through the executive office website and you can check out like what sort of information is available there. So just try to create your interest. So what it will help to our organization also, that we will able to establish the culture of compliance in our company. So this is what I want. Like this, I will suggest. And then we have like UAE like consolidated list is also there, and UN UAE terrorist list are updated periodically by adding, deleting, and amending. Executive office mails are also there. So you need to ensure like in your system, like the executive office mails are properly configured or not. So this is like a responsibility towards the compliance department. They will ensure this thing they are properly registered into the executive office website. So funds and the other assets. So this will also discuss like related to the targeted financial sanction, and in this like freezing funds, like and prohibition of the funds making funds available. So what you need to do, like if in your case, like especially if a customer is involved in any sort of the customer is belonging to sanctions, and so what you need to do, your compliance officer will have the mechanism to freeze the funds of those customers. And what he will do, he will like inform it to the fund freeze report to the FIU. FIU is Financial Intelligence Unit. So intelligence unit is like associated with our regulator, Central Bank of UAE, Financial Intelligence Unit. So all the reporting of the suspicious transaction, whenever you highlight any suspicion to your compliance, so it goes to the Financial Intelligence Unit. And after that, they receive information, then they analyze information, and then they disseminate information. So register, screening, and implement targeted financial sanctions and internal control. So this is a mechanism like which you need to incorporate into your system. By the way, here We have in our automated system in which the team can evaluate the potential risk of the customers through the screening that they are not involved any site in type of the prohibition. So this is like targeted financial sanctions. So this you can register, subscribe to the targeted financial sanctions. And the screenings are also there for the natural person. So in these areas, we conduct the screening of the customer, date of birth, nationality, and also like passport copies. We scrutinize through the sanction screening program. Same like this, we conduct the screening for the addresses, information of the corporate customers. Then confirmed match, if someone is the exact sanction match, so it will be declared is a confirmed match. Let's suppose Osama bin Laden. If is our customer, so it will be a confirmed match, which we need to report to the FIU. Potential match will be the partial match, which will be up to more than 90% it is matching, but it is not matching 100%. And in that case, you need to contact with the FIU to take the final decision. And false positive mean those matches will come, which like you can decide by your own that this is not the true match. So these are the report, FFR report, like we need to file in the case of the targeted financial sanctions offenders. So we need to file the fund freeze report to the FIU department. And then we need to submit the PNMR. So this report also you need to be familiar. What is the potential name match report? PNMR report. Partial name match report, sorry. Partial name match report is also very much important. False positive, no action required. You need to decide by your own. So, but you need to understand like what the thresholds you need to apply into the systems. So, like DNFBP main obligations, like obviously, and FIs, like when they will find out any case like related to the sanctions, so they need to freeze that one. Proliferation financing red flags, like also very important for you, like transaction involve person or entity in the foreign country of the proliferation concern. So let's suppose if you are dealing with any North Korean customer or any like Iranian customer, so you need to take care of this, like you need to conduct proper due diligence, and your compliance SOP should tell like which customer you will deal, which customer you will not deal, or like transaction involves into the possible shell companies. Shell companies are those companies which are not having like any single office, not employee, and not come under any regulatory authority visit, or like the customer is providing you some fake or forged document, or like the complex structures, or the final destination is opaque, it's not clear. So in that, these are the cases of the red flags, warning signs for the proliferation financing. So non-compliance we will discuss now a little bit. Target financial sanctions I have covered, red flags. So now one more thing, like recommendations I would like to give. And so recommendation related to the targeted financial sanctions and the proliferation financing, we need to identify, understand, and assess the risk of the targeted financial sanctions for the customer, products and services and delivery channels. And we need to implement proper training programs. So training is not like this, that today we conducted the training. So training is an ongoing process which you need to do. Today topic was like this, but sometime you can take a topic from the regulatory affairs. You can take a topic from like your regulations or the circulars, like or the federal decree law related topics you can take and you can discuss. So informal and formal trainings needs to be conducted. Then monitor for the presence of the front companies when engaging in company formation services, and find out like who is the actual beneficial owners, and screening program should also be done properly. So then last thing is like FATCA and CRS. So obviously FATCA applies to the all US people, and we have the obligation like related to the FATCA. Like if like we have onboarded any US person, is the national of the US, and he is having income here. So how he will like we need to understand from which regime he is belong to, and what is his like the business. So that we also need to report to the Ministry of Finance as well. So same like this, we have also the CRS, which states that the all financial institutions. This is like beyond the US, like the other countries. Like if we have anyone like who is involved, like the business with us, and he is the like tax resident in the participating authority. So like he is living here, but he is the like a tax resident of some country else. So this report like also needs to be submitted to the Ministry of Finance, and like TIN number, like tax identification number also needs to be obtained by the customers accordingly. And obviously this will, you must have the complete policy related to the FATCA and the CRS in your company. AML CFT policy, it should be highlighted. New technologies in fintech, like these are also some technologies. As I told you, UAE is like 75% involved into the fintech. So whenever you are onboarding any vault service providers, or you, your customer is those type of customers, those who deal into the mostly into the penny stocks or like cryptocurrencies. So for that, like you need to conduct proper enhanced due diligence of those type of customers, and you need to understand like the general index of the fintech, which is applied here in UAE. Like it represents like main pillars of the fintech ecosystem: policy, procedure, demand side, and access to the finance, and the access to the financial markets and infrastructure, and the talent development to the support innovations. And for that, like there should be a fully like finally collaboration should be there, and the partnership should be there, which can help out to assess the risk of the fintech in UAE. Then blockchains is also working. So we have ADGM, like which is DMCC. We have those who are, and even in UAE, like there's a big platform for the blockchain, and like the mechanism is very very rich for the blockchain in UAE. So this is like this is for your knowledge. Like maybe like sometime you will well go through with all these things. So at last, like I will conclude like all these things for you. So what are like the objective of this session was this, first to make you familiar about what is money laundering. We discussed that illegitimate money will come, the customer will become like through the illegitimate money. So for that, you need to establish complete controls. You need to apply proper due diligence of your customers when you onboard any customer, even it is individual or it is corporate. And in some cases, you need to establish the source of fund of your customer. If it is required, your compliance team guidelines you that one. So this is like money laundering related we talk. Second thing is this, like related to the terrorist financing we discussed. And terrorist financing, sometimes it is done through the legitimate source also. And but terrorist financing is like a very risky, and it sometimes happens through the smaller amounts. So there are some similarities also with the money laundering and terrorist financing, that they are sometimes it like both are the layering techniques to like the same into the money laundering and the terrorist financing. So this we have discussed. Then we discuss about the regulatory status, like what are the recent laws and the circulars are prevailing nowadays in UAE. And for the authorities like related to the compliance, you need to adhere with the all regulatory guidelines for your company. And very much important part, I tell you to everyone, that everybody should go through the AML policies, and it should be like witnessed. It should be there should be a proper acknowledgement that everybody gone through with our AML policy, and they know what is the expectation of the compliance. Third thing, which is very much important, that we need to establish a complete culture of compliance, and this culture of compliance will help us out like to minimize the risk of our organization. So culture will be established from the top, and then accordingly it will come towards the downside. So we need to approach, like apply two types of approach: top to bottom and bottom up approach. This is like very much important. And then we discuss about the risk-based approach. Risk-based approach, when we ever discuss, so you need to understand, like, we are evaluating the customer into the 7 categories, which are the customer type, product, services, geographics, delivery channel, counterparty risk, and like other money laundering, terrorist risk, and technology risk, new technology risk. So these are the 7 categories in which you need to evaluate your customers. If your customer are having any risk, so you need to apply the proper controls. So then we discuss the enterprise-wide risk assessment, that being a company as a Century Financial, what is our own risk? So for that, I told you, like, we need to understand those areas. We need to assess those areas which are more risky and which we are more prone. So that how we can minimize those risks. And then we discussed, like, towards the targeted financial sanctions and the proliferation financing. And in the targeted financial sanctions, we discussed that we will not deal with any individual, those who are sanctioned under any individual which is sanctioned under the United Nations or sanctioned through the UAE government, like executive office. If it is under sanction, we will not deal with those customers. And second thing which we discuss about the terrorist financing, targeted financial sanctions. We discussed, like, the countries also, that those countries though will be involved into the sanctions, so we will apply more and high robust controls to minimize their risk. So after this, we discussed about the proliferation financing. So proliferation financing is linked with the nuclear weapon of mass destruction and nuclear deterrent. So that you need to, like, take care that you will not engage yourself with any sort of customers who is involved in any sort of like weapon of mass destruction. And finally, like, which is very important for you all people, to understand, like, to understand your business and then identify the risk of your customers. And in excitement of the business, we will not compromise towards the compliance. So this should be like this: we will do good business, and meanwhile we will also establish good compliance also. So it will be go parallel together. And and onward, like, we have this thing that we will keep updating ourselves with the recent trends and typologies. We will keep ourselves update what are the new things are coming. And this is like how we will educate ourselves. Like, our compliance officer will give us time to time some education through some circulars, some trainings, some webinars, some conferences, through some emails. And then we will, inshallah, like, we will achieve the desired result. So thank you very much, so all of you, and from my side. And I highly welcome to all of you, like, repeatedly, whenever you will love to see us. Inshallah, we will perform again this type of exercises, this type of trainings with you. And like, I will request to my friend, like, if anyone having questions, so please you can ask me, or otherwise I would love, like, to my colleague, like, who will, like, conclude these things. And I think, like, you have a now little bit test, and I will say, like, for that you need to perform very well, and I wish you best of luck.
Thank you so much, Mr. Rizwan. And you have been talking for non-stop for more than 1.5 hours now. I would request, please have water. And thank you so much for enlightening us. And I think on behalf of Century, we extend our deepest gratitude to Mr. Rizwan for sharing his expertise on anti-money laundering practices with us today. And this information which you have provided us, it's very it's absolutely invaluable. It's very precious, and I think it will definitely enhance our understanding on this very critical aspect. I absolutely love the last thing which you said, that in the excitement of getting more business, we must not forget the compliance part. We need good business and we need a stronger compliance, and I think that is the success story of every company. So I think that is something which is really good. And I think the amount of dedication and information which you have shown today and which you have displayed, once again, we'll use this information and we'll do our collective efforts to maintain the highest standards of financial integrity. And once again, a heartful thanks to you. And we are looking forward to have multiple sessions with you. You also said that training is just a first step, and all of us need more and more information, and we'll make sure that the path which you have shown today will continue on this path and will get better and better.
Thank you very much, sir. Thank you very much. So
Thank
nice
you.
of you. And thank you to all of the audience. And I will say, like, inshallah, we will keep doing this thing. So thank you very much.
Thank you, Mr. Zwan. Thank you
Thank
so
you.
much.
Take care.